4 ways into car wash business, but only 2 are actually worth your time and your money. From $1,500 to $8 million. I ran the numbers on all 4. 2 of them are genuinely good businesses from my analysis. 2 of them are capital traps that look good on paper and lose to the options sitting right next to them. I'm going to walk you through all 4. I'm going to show what it actually costs to buy one that already exists today and tell you exactly which 2 I put my money into. Before we get into it, here's the filter every one of these gets run through. What return do I need to make this worth my time? How many hours a week does it actually cost me? How much capital is at risk if I'm completely wrong? 4 options, 1 filter, a binary answer every time. Let's go. All right, option 1, self-serve, small bay. Small self-serve bay, coin op drive through a wand. You got a wand and a vacuum. The investment, yeah, y'all have seen these. The investment is $100,000 to $300,000, typically for a 4-bay build. The revenue is $50,000 to $200,000 a year. Margins in the 20 to 35%. There's an actual listing right now that proves this out. An established self-serve wash in Tyler, Texas, open since 2005, is generating $175,000 a year. That's not hypothetical. That's a real ceiling on this format. It's sitting on the market today. Here's the problem. This is the lowest bar to entry in the entire category, and that's exactly why it's a trap. You're capped under $200,000 a year before you've spent a dime on marketing. And every dollar of that revenue is fighting the weather. One cold snap, one rainy month, your coin boxes sit empty. My verdict is pass. Not because the numbers are bad, because the ceiling is too low to justify the headache and the risk. Option 2, in-bay automatic to express tunnel. So the in-bay automatic scaling up into the full express tunnel. This investment is going to be $250,000 for a single automated bay, up to $8 million for a full conveyor tunnel. That's the widest range of the 4 that I'm going to show you. And that's an on-ramp, not a weakness. Here's where the real money is. A well-run express tunnel grosses $1.5 to $4 million a year. At margins most small business owners never see, 35 to 50%. And membership programs make up 40 to 60% of that total. People pay you every month whether they use the wash or not. This is also the exact formula private equity is rolling up right now. Mr. Car Wash just went private at roughly 9 times earnings. When institutional money consolidates a category at that kind of multiple, that's a signal of unit economics that work. Verdict is buy. This is the best margin to labor ratio in the category, and it's scale. So here's a quick side. How this actually can get financed. Quick reality check, because that tunnel isn't as far out of reach as the price tag makes it sound. The primary tool is an SBA 7A loan, up to $5 million, covering real estate equipment, working capital, and even acquisition price of an existing car wash, all in one loan. Down payments run 10 to 20%. 20 if you're building new, closer to 10 if you're buying something existing that's already generating cash flow. Terms stretch from 25 years on the real estate side, which is what makes a payment on $1.5 million tunnel survivable for a regular person, not just private equity fund. Here's the part nobody tells you. Most major banks don't want this loan. Bank of America wrote exactly 1 SBA car wash loan in 5 years. Citigroup wrote 0, not because numbers don't work, because car washes are a specialty asset class. And generalist lenders don't know how to underwrite them, which means the actual leverage point isn't the SBA program. It's finding a lender who's done this deal before. That's a moat most people chasing the business never even look for. So there's your barrier to entry. What it costs to actually buy one today. If you don't have to build any of this stuff from scratch, here's what's actually listed right now for sale. An 80-foot express tunnel in Texas asking $1.6 million with 1,400 active members already in place. So you're not starting at zero. You're buying a customer base that's already paying you every month before you've changed a single thing. Another FlexServe hybrid in North Carolina, combining a tunnel and full service, asking 2.35 million on a 1.2 million revenue and 282,000 in earnings before taxes. And on a high end, a fully renovated car wash in New York, established 29 years ago, asking $7 million on a 3.1 million in revenue and over 1 million in cash flow. Across the whole category, the median sale price on Biz Buy Sell right now is $857,000. And here's the number that actually matters when you plan your exit. Express tunnels with a strong membership are trading at 5 to 7 times earnings or higher, which is incredible. Full service trades at the bottom of that range because buyers already know what I'm about to tell you. Self-serve gets valued mostly on the real estate underneath it, not the business itself. Same industry, same square footage, completely different exit based entirely on which format you picked on day one. Option 3, full service plus retail. Option 3 is the full service car wash. You exit the car, employees vacuum it, clean the mats, clean the windows, run the full menu, sometimes with a gift shop or convenience store waiting in the waiting area. This investment is $2 to $8 million. Revenue per car is about $40 or more in the right market. You already know this setup. Even if you've never run a number on it, it's the car wash from Breaking Bad. Walter White didn't buy a full service car wash because he liked to clean cars. He bought it because a full service operation runs hundreds of small transactions per day. And that volume is exactly what makes it one of the oldest fronts in the book for the money you can't explain. It's not just a plot on TV. It's real. The real economics of format. High cash volume, low visibility per transaction. It's also exactly why lenders and buyers scrutinize full service acquisitions harder than any other format on this list. The same feature that makes it useful in a crime drama makes it a headache in actuality, in actual due diligence. Strip away the Breaking Bad reference, and here are the real numbers. Labor eats 40 to 50% of revenue. Half of what comes in the door goes right back out to payroll. And the entire industry is walking away from this format. Full service is shrinking. Tunnel is growing. That's the trend in the data, not my opinion. The verdict is pass. Most capital, most labor, wrong direction. Option 4, mobile detailing. No real estate, no tunnel, no multi-million-dollar check. Investment, $1,500 to $9,000 median. Revenue, $50,000 to $100,000 a year as a solo operator at gross margins of 70 to 85%. So solo operators are clearing 50 to 100 grand a year. That's a good living on a few $1,000s in gear. The industry average sits around $220,000 in revenue. Top performers push $900,000 a year because once you're profitable, you don't stop at one van. You hire a second technician, then a third. This category is growing almost 20% a year, nearly 4 times faster than the rest of the car care market. Verdict, buy. Lowest risk in the category and a real path to scale. One more number before we wrap this up because it changes how you think about all 4 options. How long does any of this last? Car wash equipment has a real expiration date. Touchless systems run 10 to 15 years. Tunnel brush systems can run 15 to 25 years if you maintain them well. But the tax code treats that equipment as a 7-year asset, which sounds like a downside until you realize what it means. Car washes reclassify 65 to 100% of their cost basis into short life assets versus 20 to 30% for a typical commercial building. That's an aggressive depreciation advantage stacked on top of operating cash flow. Meanwhile, the real estate underneath it, if you own it, doesn't expire at all. It appreciates like any other commercial property. So what you actually own is a depreciating, replaceable equipment layer sitting on top of an appreciating real estate layer. Replace the wear parts, hold the dirt. That combination is a big part of why real estate investors are drawn to this category, not just car wash operators. So here's where we land. Small self-serve bay, pass. The ceiling is too low. In-bay automatic to express tunnel, buy. Best margins, real financing path, and resale multiple to match it. Full service retail, full service plus retail, pass. Most capital, most labor, worse exit multiple, wrong industry direction. Mobile detailing, buy it. Lowest risk, real scaling path. The two winners sit at the opposite ends of the capital spectrum. One is $1,500 and one is multi-million dollars. So they're both financeable with the right lender. What they both avoid is the same trap, the labor-heavy middle that eats the other two options alive. It pays the worst multiple when you go to sell. It's just what it is, just the market. Two businesses, same industry, completely different entry points. That's what stacking income actually looks like. It's not about picking the flashiest business in the room. It's not about knowing which format the numbers actually support and which pays you back when you walk away. No, it's about knowing which format the numbers actually support and which pays you back when you walk away. If you want to see the next stack broken down the same way, subscribe and there'll be another business that I break down for you shortly. I appreciate you. See you.